All right, what's up, guys? Haha, it's been a while since I've done a true podcast here. It's been a busy past couple 3 weeks. Really haven't been trading a tremendous amount, simply because my son, 15-month-old, is in swim lessons. ISR, I believe is what it's called, infant swimming rescue, possibly. But that is from 10:30 until it's really only 15 minutes, but I want to be there for every single one of them. So that is the morning session. Normally I like to look at the chart starting around 9:30, not really take my first trade until about 10:15, and I don't want to be in a trade and then have to leave. So I've been limited on my trades, but I've been doing a couple options. I want to show you something here. So as I've told you in the past, I trade mainly futures contracts with a prop firm's money. So I'm not using any of my own money, and I'm getting to keep 90% of those profits. Now, this account that you're looking at here, this is a Webull account. This is one of my brokers that I use. This is actually an options contract that I traded. Now, I want you to look at this here. View trade details. Let me bring this over. I don't know how well you can see that, but this QQQ 343 put, so $343 was a strike. The put was expiring on the 15th of December. So this trade is still open, but I want to show you the potential here. The experts tell you to buy and hold, buy and hold, buy and hold. On average, you're going to gain 7%. Woo, 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 woo. Yay, fantastic. What I want to show you is a way to break out of that thinking, hence the name of the project, so that you can make yourself more money and put yourself in a better financial situation so that in time you can have financial stability. Learn to play in their rigged market. Okay, so I purchased this on 10/12. Now, keep in mind, it's the 26th, so what are we, 12, 14? So it's 2 weeks ago, pretty much. And that was before the market started to sell off. I purchased this for a price of $3.53. Now, I only purchased one. I could have purchased 10. I could have purchased 20 if I wanted. But, I spent $353 on this contract. One contract, 353 cents. There are 100 shares per contract. Okay. So since that time that I purchased this, now keep in mind the expiry is in mid-December. I purchased for $353. Let's go back here to the date. Let's see what we said, the 14th. So right around here. And now what this purchase was is that I'm betting that QQQ is going to go down to a strike price as close to 343 as possible by the time that the contract expires. Now, with options, you have to be leery about something which is known as the Greeks, alpha, theta. I can explain those at a later time. That's not for you if you're new to this, but you have to keep that in mind because it does affect your prices, whether it be profit, mainly profit. You don't got to worry about loss because the goal is, of course, to profit from all these trades. But since that point in time, since the 14th, look at what has occurred with this contract. It went from $3.53, which is where I purchased it, to $11.80. Now, I want you to remember, it's only October 26th. So this price hasn't exponentially increased because there is still an opportunity in the market makers' minds that QQQ could rebound by the 12th and completely wipe away any of these profits and my original investment of $353. So that is always an option when you're dealing with options. But I wanted to show you this because right now this contract is worth, as I am doing this, $11.30. So now what I want to do is I want to go over here. I don't use this account for much other than just buying some options and whatnot, but where are we at? So let's go over here. The total P&L on this purchase is $794. It has an open P&L percentage as of right now 225%. So now you know why I trade these things, because the buy and hold strategy of an average rate of return of 7% just isn't going to cut it for me, and it shouldn't cut it for you. P&L today is 37%. So this is currently up 225%, and it's going to, of course, fluctuate because as the price of QQQ bounces around, right now, as I look at it, QQQ is $342. We just broke under 343. So now here is what can take place with this, right? Let's go to this QQQ chart. I just want to show you. Go to a new chart here. Let's go up here. What am I doing? I don't got to go up there. I'm just going to go right over here. Okay. So this is a QQQ 15-minute. Let's actually go to a 4-hour chart just to give you a little bit more insight of what's going on. All right. I'm going to scroll down here. Okay, we are currently right here. Right here is where we're at. The last time we saw prices like this, like I mentioned last night on a post, was May. Okay, so all of these gains, like if you were to buy QQQ and just simply hold for your buy and hold strategy, well, guess what? All the gains that you had, you look at your portfolio, and you go, oh, I'm up. And then a couple months later, you're back down. So while I do believe in playing the long game, as I said, 75% of my portfolio, my money, is managed by me. I do have some other management agreements with brokers that take care of a 25% that I don't really want to even worry about. Let them worry about it, okay? But I want you to look at this chart here, okay? I'm scrolling out. Like, this was March. Remember the big banking debacle? Banks were starting to fail. Then all of a sudden we got out of that, and what happened with QQQ? Went up 282 to 388. So 106 points. Okay. Now my contract doesn't expire until right around here. See where my mouse is at? So let's put a line there. This is when my contract expires. And I want to explain something to you. Okay. So now here's the risk of dealing with options. Surely QQQ could stay here until the 12th of December. And if it does right now, what's going to happen is my percentage is going to go down. Why is that? Because the closer that we get to December, wherever the price is at, so right now I'm looking at it's at 242, right? I would still be up, but I would not be up nearly as much as I am now. So you're probably saying to yourself, well, Steve, why aren't you selling? Well, there's a reason why I'm not selling right now. Okay. Because I want to see what occurs over the course of the next week. Okay. I'm going to take a risk that we possibly over the course of the next week, and who knows, this might happen the next day. I don't know. I don't control this stuff. I only trade it. You see this gap right here? The 334. Like what I mean by gap is, see how let me zoom in here so you can see this better. Okay, so basically, of course, this was a Wednesday. The next day, pardon me, QQQ gapped up. So that means that next day it opened a lot higher than it closed. Okay, it was a big gap up. So I'm anticipating that within the next week, maybe sooner, that we are going to what's known as fill this gap. And now you say, well, Steve, how did you know, or how did you anticipate, or maybe it was just a dumb stroke of luck that, why on the 12th or 14th of October, which would have been right here, or 12th of October, yeah, right here, which would have been right here. Why did you say that by December 18th, and why did you choose December 18th or December 12th? I'm getting these dates mixed up. All you need to know is that I basically chose a 2-month out expiration period. Now, let me just give you a little bit of insight. If I would have chosen a, say, 2-week out expiration date, what would have occurred was my premiums, which I paid for that contract, instead of it being $353, and I'm just hypothetically making these numbers up, may have been $553 or $653. I would have paid, of course, double for that. But what would be occurring right now is those percentages, those profits would be astronomically higher. Why? Because say if my option were to expire tomorrow and this price would be below 343, then the chances of it, say if it closes today below 343, the chances of it going back up 343 wouldn't be that great. Okay. I mean, it's going to probably bounce around here, but here is a reason why I chose 343, because I liked the premium that I was paying. And right after this gap up right here, when I looked at this chart and I said, okay, where am I? Remember, I purchased it around here, around this time frame, and it was right before the big downtrend that started. Now, this kind of be considered even though it's not perfect, it's head and shoulders pattern. Head to shoulders. Once it breaks below that, boom, normally down it goes. All right, but I chose that because I had a feeling that it was going to test this gap. And my feeling so far has been correct. Now, there's a chance that we may get out to December 12th when my option expires. And for all I know, we might be down here. We might be testing these lows right here. As I said, I don't know. I'm not the market maker. But what two options at this point in time? I either hold this contract until closer to expiration to see what price does. As price continues to move lower, okay, my profits are only going to keep going up and up and up and up and up and up and up. All right. If I hold this contract closer to expiration, as price goes or stays in this area, say it stays in this area, my profits are going to get smaller and smaller and smaller and smaller. Okay, and that's kind of how the Greeks play out, that I will explain to you at a later date. But these are known as options contracts, And the return on investment on these could be astronomical if you know what you're doing. Let me bring this back up again. As I said, if I was to sell this right now, I paid $353 for this contract. If I were to sell it right now, I would be $809 in profit. So in 2 weeks, off of one trade, I basically doubled my money and some. Let's just say so. I'm up, as we said, 229%. You are never going to get those types of returns simply on a buy and hold strategy. Yeah, maybe over 20, 30 years. But I mean, I think QQQ, let's just take it back here. Let's just go from the beginning of 23 until, let's do a, let's see. So, let me go down here. It was up 49%. 49, okay? At its highest. And now it's up 32%. Would you rather have 32% or 230%? The option's yours, guys. You could either learn how to do this and take advantage of your financial future, or you can trust your broker, which there's nothing against that to do it for you. I'm just trying to give you options and opportunities so that you can make the decisions that best benefit you and your family. Okay? That's what I want to do. I want to help out. If you need assistance with this, please contact me. I cannot give you the advice because I'm not a financial advisor, but I can tell you where to go, where you could at least start the process of taking advantage of your financial future. All right, guys, thanks for viewing. Have yourself a wonderful day. Once again, this is Steve with the Breakout Project. We all have the same 24. Use wisely.